Hi, I'm Memory Davenport with Capital Federal Credit Union. I'm a federal mortgage loan originator, and I provide financing options for clients in all 50 states. Now, I'm excited to share with you how we can turn your homeownership dream into a reality and make that process as seamless as possible for you. Now, we understand that every home buyer is unique, which is why we offer a range of products tailored to meet your needs. So today I'm going to go over a few of those products that we have available. So first, we'll start with the conventional loan. So a conventional loan is typically for those of you who have a higher credit score and more money out of pocket. So the minimum credit score requirements for a conventional loan is a 620 with down payments as low as 5%. Next is the FHA loan. A FHA loan is typically for those with less money out of pocket and a lower credit score. So the minimum credit score requirements for a FHA loan is a 580, and the down payment is approximately 3.5%. Third is the USDA loan. So a USDA loan is made for those of you who are okay with living in a rural area. Now, the minimum requirements for a USDA loan is a 640. However, there's a $0 down payment. Next is the VA loan. So the VA loan is for military service members, vets, and their spouses. Now, there's not really a minimum credit score for VA loans, but with our company, we like for your credit score to be at minimum around a 580, and there's no down payment. We also have options for very low to low income families with a minimum credit score of 620, down payment 3% with the ability to lock in a lower interest rate. Now, we have down payment assistance programs for families who have less money out of pocket. Also, for those of you who currently own a home, we have refinance options available. If you have equity in your home and you're not quite ready to refinance, we also have home equity lines of credit. And lastly, we have home loan solutions for those of you who do not have a social security number, but have been issued an individual taxpayer identification number. So now it's very important for you to have all of your documents ready prior to submitting your application for pre-approval. So right now I'm going to go over all of those documents needed. Just take out a pen and a paper to write this down. And then when you get home, create a folder so that you can keep track of these documents so that you can have everything ready to prevent a delay in your pre-approval process. So I have my list here just in case I forget anything. So if you are an employee, you need the last 2 years of your taxes, last 2 years of your W-2s, last 2 pay stubs, last 2 months bank statements, your driver's license, and your social security card. Now, if you are self-employed, you need slightly different items. You need your business and personal tax returns the last 2 years. You need the last 2 years of your 1099 if there are any. You need last 2 months bank statements, your driver's license, and your social security card. Our company is on a mission to increase home ownership to 75 for all. So if you have a dream of home ownership and you're not quite sure if you're ready, contact me today so that we can map out a plan for you. Also, if you have low credit, we have an in-house program to help you improve your credit. Whatever your situation, we will do our best to get you into position for home ownership. As I mentioned before, we're on a mission to increase home ownership to 75% for all, and we need all hands on deck. So if you're looking for an opportunity where you can give back to the community, as well as make an additional income, we would love to have you. Now let's talk about wealth building strategies. Now, I'm also a financial professional, and we offer services ranging from kid head start plans, college savings plans, life insurance policies, and wealth building strategies. Now we're going to talk about how you can start building wealth at an early age. One of the wealth building strategies that I specialize in is called an Index Universal Life Insurance Policy, also known as an IUL. And what an IUL is a permanent life insurance policy that combines a death benefit with a cash value component, where that cash value has potential to grow. So what you would do is you would first start off with a savings goal. That can be $100, $500, or even $1,000. You choose. Once you've determined your savings goal, then you will get with a licensed professional, me of course, to set up that cash value life insurance policy. Take a look at this illustration. So for today's example, we're going to use John. John is a 35-year-old male with good health, and he's looking to save $500 per month. John is choosing to have a death benefit of $500,000. So based off of his age and good health, his estimated monthly premium is $75 per month. The extra $425 will go into an account where it has the potential to earn interest. You can think of it as John's own personal bank. While the money is sitting in that bank account, there is a 0% floor, which means if the interest rates go below 0%, he will not lose his money. Okay, let's take a look at this graph here. Let's say John earned 9% interest the first year. The second year, interest rates dropped to negative 12%. Because his account has the 0% floor, his account does not lose any money. The third year, the interest rates increase 15%. Fourth year, negative 20%. Again, he does not lose any money. In addition to John not losing money, John is able to borrow from the account tax-free after a certain period of time, and he doesn't have to pay it back. So let's say John saves until the age of 70. By the age of 70, he would have saved a total of $210,000. Depending on the market, his new policy value is over $700,000, in which he's able to withdraw and use for whatever he chooses. But let's say, God forbid, John passes away at the age of 70. If he does not take any funds from that amount, his family will receive over $900,000. But let's go another route. Let's say John decides not to cash out the $700,000 and decides to annuitize it. He will receive approximately $65,000 a year until the age of 90. So by the age of 90, receiving $65,000 a year, his total amount received will be over $1.3 million, and he will still have $147,000 to leave for his family. The Index Universal Life Insurance policy can also be used for kids. The earlier you have them signed up, the cheaper the policy, and the more you can contribute towards the cash value. Now, when they turn 18, you can use that money to pay for college. You can use that money to pay a down payment on a house. It all depends on you. You can use that money tax-free, and you don't have to pay it back. Now, the numbers provided in the illustration, they are all estimates. So the market can perform better or they can perform worse. It all depends. But I'll be happy to sit down with you and your family to discuss a plan that's best fit for you, whether that's mortgage financing or personal financing. I'm here to help you whenever you need. I will also be able to do a deeper dive into the policies if you would like. Just reach out to me at any time. Again, my name is Memory Davenport, and I look forward to serving you and your family's financial needs. Have a great day.